Well, good morning, everyone. Good morning. This is Marziti here with the Bullish Bears, and we are doing the pre-market discussion here on Monday, September the 30th, 2024. Alrighty. I hope everyone had a good weekend. I know that I'm in the Carolinas of the United States here, and we had the hurricane hit us. We had some areas around the Asheville, North Carolina area were pretty devastated, I guess. They got 12 inches of rain uh, within one day, and it caused a lot of mudslides. A lot of roads were washed out and different things like that. And a lot of people are literally cut off and only getting serviced by helicopters dropping off supplies and things like that. So we do kind of remember that. Let's keep things in perspective when we talk about whether you want to talk about it, call it your blessings or your fortunes or whatever. There are definitely a lot of people out there that, are not having the best of days today. But we are here to talk about trading. So let's kind of put that other discussion to the side and get down to this here. We're looking at the daily on crude, the ES, gold, the NASDAQ. I did have the Russell here, but to be honest, I really don't know anybody that trades the Russell, and I hardly ever trade the Russell. So I just said, to heck with it, let's get rid of it. I am going to talk about something a little bit different, about what we call gap fill plays. And there is, to a certain extent, a gap fill on the SPY every day. And the reason being is that of course, the SPY closes like all the markets close at 4 or 5 p.m. Eastern Time. But the New York session, even though the futures are already open, starting at 6 p.m. Eastern last night, and even though the SPY has actually been trading, there are statistics about what happens at the open of the New York session at 9:30, and I kind of want to take a look at that, and I'll talk more about that in a moment. So let's go ahead and make our first initial survey. On the daily level, crude implied volatility is down, up on the ES, up on gold. SPY doesn't count. It's not technically open because we're looking at the daily candles right now. All right. Let's just first of all notice here what happened in crude. We had a low, we had a high, and let me zoom in on that so you guys can see that. We had a low, we had a high, we had a 50% move on the daily level. It's come right back into that 50. So we see that, it is in a position of, can it go up or can it go down? Yes, is the actual answer, because it is at a decision point. Maybe we can get more of a clue when we get down to the hourly. Let's take a look at the ES here. We kind of see that the ES hit a bottom. It tried to push low, rejected. But you'll notice that the majority of these candles here are really weak. They are moving up. Big push up, weak. The DeMark sequence counter here triggers, indicating that we should now start going down. And you kind of see that we are starting to get this rollover effect. So that's interesting to see on the daily level. Here, gold, we had a pullback right here. So we had a move up, a pullback, and a run. We say, well, how far is this supposed to run? Well, if we were to zoom in on a smaller time frame, what you would see here would be a bull flag. And the range that this thing is supposed to run would be probably to this candle here. So you can see it hit a full 100% and it started to reject it and roll back. It is right now, where's the, let's see, that's the 61. So it's also sitting at its 50% line. So gold is also at a decision point, north or south. We don't necessarily know. I hope you're starting to see the point on some of this, of what's going on. Now, the NASDAQ looks essentially, I mean, the NASDAQ is very heavily correlated with the ES. A little bit different here. We see this guy actually has a few different demarcs type things, but not a big deal. The overall shape is the same. So whatever projection we make on the ES, we're going to make on the NASDAQ. Again, we're kind of starting to see this roll over as it looks like it's going to start rolling back to the south. All right, the general markets here being the culmination of our major